All right, good. All right, well, thank you, everybody, and thank you again to Marine Money. I've been asked to come up today and do a presentation on the U.S. M&A markets, which is a presentation I actually gave last year at the Marine Money New Orleans conference, and I'm going to give a similar conference or similar presentation again at this year's New Orleans Marine Money Conference. But it's a space where at AMA we've been particularly active, and it's a space that's seen like a huge increase in activity over the last several years. See if I can get this to work. I just hit green. Oh, they're green as. Okay, so first, just by quick way of backdrop, the Jones Act space has never been a big public market sector, but in 2008, a little less than 20 years ago, there were 10 plus Jones Act companies that were publicly listed. If you looked at 2019, which is right before COVID hit, we're down to roughly 5 publicly listed shipping companies, and you can see 2 were sold and 1 went bankrupt between 2008 and 2019. And if you look today, the universe of publicly listed shipping companies further declined to 3, with both of the remaining companies being taken private. So when we look at what consolidations happen in the sector, it's kind of been accelerating across a lot of categories, but I think there's 3 primary kind of themes that we see in kind of Jones Act MA in terms of what's changed over the last several years. So one is the rise of what we call financial strategics. So there's a group of financial sponsors who really just focus on doing marine investing, and you can see them on the acquirer side of this page. It's guys like Maritime Partners and J.P. Morgan Asset Management, and we put Marquette, or not, I guess not Marquette, but Redwood, who acquired Marquette. Has been acquiring a number of Jones Act businesses recently. So that's one kind of trend we've seen. The next trend we've seen is the rise of infrastructure funds that have been coming into the Jones Act space. And the third trend we've seen is just strategics themselves, looking for opportunities to grow, and being much better capitalized, than they were, kind of, right after COVID with cash, so they can actually acquire businesses. So those are the 3 groups of buyers that have emerged. I think this room knows a whole lot about Jones Act already. So the next 2 pages just talks about the opportunities, but just to go through this really quickly, Jones Act is comprised of a whole bunch of different niches. So, there's literally dozens of, different sectors that really, don't compete at all with each other. We've laid out some of those niche programs in Jones Act, but, it includes things, as far removed as tanker shipping, harbor towing, and kind of seafood, and dredging and some construction services are also included in Jones Act. And then you've got the U.S. flag trade as well, which has been in the press a lot recently. You've got essentially 3 primary U.S. flag programs. One is the MSP program, one is the TSP program, that stands for Tanker Security Program, and then the MSC program. And Congress has been allocating capital, both parties have been supportive of allocating capital to these programs, and they're trying to grow these programs. And I'm sure you've all heard in the news about the SHIPS Act, which is kind of in Congress now. I don't think anybody knows exactly what is going to be in the SHIPS Act when it comes up for vote, but they've talked about things like revitalizing U.S. shipbuilding and kind of growing dramatically the number of trained kind of U.S. crews. So we're kind of more prepared if we need to go to war, particularly with China, which I guess the U.S. is concerned is dominating global shipbuilding and shipping these days. So we talk about the barriers to entry. The reason why we're not building ships in the U.S. is it costs literally 3 to 4 times as much to build large ships in the U.S. as it does to build them internationally, and it's more difficult to finance and fund those vessels in the yards as well. So there's been very little new building activity. The price of the new buildings in the Jones Act have gone up, probably 40, 50% since COVID. The prices have gone up in the international market as well, but not by as much. And charter rates have gone up. I'd say they're at the highest level they've ever been across most classes of Jones Act. But given how much more it costs to build ships, it still does not make economic sense to build new ones. So whether we build new vessels and really grow this industry or not, it's going to be a function of one, higher rates, or two, possibly, U.S. government involvement to try to incentivize more building activity. But we got to be careful with that, because if we do incentivize new building activity and we don't incentivize new demand, these assets last a long time and it will not ultimately be beneficial to the industry. So next slide's like the challenges of ownership. I think the only points I'll make on this slide, because some of them have been made already, but these markets are very small. Like almost all the Jones Act markets are very small, and almost all of them are very low growth. Like when we were talking last year, the one kind of high growth Jones Act market was offshore wind. And that's kind of, I think, as we all know, has changed over the last year, and now it's probably the fastest shrinking market, at least over the next 4 years of the Jones Act. Today, the only sector that's really, I'd say, growing meaningfully is the U.S. flag sector, meaning the international U.S. flag, the non-U.S. built vessels, but ships that are crewed by U.S. citizens. So then we looked at the various sectors of U.S. flag shipping, and we looked at them relative to size and relative to how consolidated each market is. And I think the point is, there's a number of different points here, but overall, it's a very fragmented market, and it's a very small market. So you can see most of the companies in this space are down in the small market size, even though this is a chart that's relative to each other. But in terms of large and not consolidated, inland marine would probably be the best example of that. That includes kind of river barges, dry and wet primarily. And then if you look at kind of the most consolidated sectors, that would be kind of the Jones Act container ships, where you really only have three markets: Hawaii, Puerto Rico, and Alaska, and really only, 3 or 4 competitors across, all three of those markets. So then we kind of looked at each kind of Jones Act sector separately, or at least the 4 or 5 big ones. So the first sector here is, Blue Water Jones Act. That includes all of the large ships. So we break it down into tankers and coastal barges, container ships and ro-ros and dry bulk. The big themes affecting this industry is, the fleet is getting old. There's been no new big ships built over the last, probably 2 or 3 years. I think the last ones to get delivered were a couple container ships that Matson built. But if we look at the tanker space, for example, there's been no new builds, since before COVID. And if we look at the dry bulk space, there's also been no new builds since before COVID. So the fleet is quickly getting older. And I'd say across these sectors, there are very few growth catalysts. So, the markets are stable, they're consistent, but they're not growing. And in some cases, I'd say they're slowly kind of shrinking. And the driving factor of M&A activity in this sector is consolidation. Essentially, strategics buying strategics, or financial strategics buying strategics. And, it's been an area of, I'd say, very high activity, the last 3 years. And the most recent deal was Maritime Partners acquiring Centerline in August. But, if we go back to August of 24, you saw the merger of Crawley and Seacor's tanker business into a new company called Fairwater. And around that same time, you saw, OSG kind of go private and get acquired by Saltchuk. So, I'd say a lot of activity after a long period of time of limited activity. So looking at a quick case study of somebody who's developed I'd say a consolidation story in this business. We show Fairwater, which is a combination of Crawley and Secor. I think the message here is both companies acquired businesses, ordered new buildings, on their own, formed JVs, and at least Crawley's case with oil majors. So they grew their business and then ultimately, merged the two businesses together to create, an even larger business, which I think today may be the largest blue water tanker operator, at least by number of vessels. So then if we look at the brown water, the brown water is broken down into dry barges, tank barges, and we put dredging in here as well. Similar story to tankers, and that it's an aging fleet with very limited fleet replacement. So there's been very few dry barges and very few tank barges built. There have been new dredges built, including a couple by Great Lakes, that got delivered over the last year. So that's one of the, I'd say, bright spots in the new building market. Most of the consolidation activity has been focused around the inland barge market. So you saw, Canal Barge and Marquette merge earlier this year. You saw Tidewater get acquired by Ulico. If we look at the next segment's U.S. flag, and I know I'm running short on time here, so I'm going to go more quickly. But U.S. flag is kind of the smallest market in the we'll call it Jones Act, even though this isn't really Jones Act. It's broken down between container ro-ros, tankers, and heavy lift dry cargo. The interesting thing here is, Congress, has approved additional vessels getting allocated into this program. There's expectations that Ships Act is going to do substantially more to grow and expand this program. And you've seen, a number of kind of marquee M&A transactions happen, over the last couple of years, as are highlighted on the right. The next slide here is U.S. Shipyards. This specific request from the Marine Money team to talk about shipyards and investment banking. There historically hasn't been a lot of work for us to do with shipyards. But we have seen, I'd say, a lot of interesting developments. So especially if you look at the very large shipyards, there's only 4 shipyards here, and this really isn't a select group. This is the full group, in our opinion, of shipyards that'll build large ocean-going Jones Act vessels. And if you look at this group, there's only one shipyard that's really actively pursuing Jones Act new buildings. That would be the Hanwha Philly shipyard. The other 3, Fincantieri and General Dynamics, are both quite full with naval ships. Fincantieri just announced in its earnings that I think it's got the largest backlog ever, and it's not with commercial vessels. It's with naval vessels. And then the Keppel, shipyard that's the Brownsville, Texas shipyard. It recently got sold, and our understanding is there will be no new ships built in that shipyard due to losses sustained on, recent new buildings that they've attempted to perform. So then if we look at the landscape and kind of future outlook, I think we've talked about everything that's happening today. If we look into the future, we feel there's a few drivers. One, the fleet has to get renewed. Like, you can't continue to operate the fleet indefinitely without new tonnage coming to market. So I think we'll see through acquisitions and financing activity, more new builds going forward, and probably through government support programs as well. That's going to require kind of better financial returns than these companies are generating today. I'd say returns are pretty good based on historical cost of vessels, but based on the new cost of building these assets, returns need to improve, substantially from where they are today. And then the final point is, defense and security, kind of focus of the U.S. government is going to drive a lot of changes here. I don't think any of us are sure what those changes will be. Hopefully they're ultimately to the positive, but hopefully they're done in a way that drives, both new tonnage and new demand, and not just new tonnage. So that's kind of the presentation. I know I'm out of time, and if anybody's got any questions, I'm happy to address them afterwards.